Good morning, all. I hope you had a great weekend and welcome to this morning's video. So, this morning I have four pairs on watch, and those are pound dollar, Aussie dollar, euro dollar, and Swiss yen. So, my favorite of the bunch is pound dollar. I said last week how the market can look pretty awful sometimes, and then within no time at all, the market can be looking very, very nice indeed. And in my opinion, this week, the setups which are in my top six and my additional pairs, as you can see there, I think they look very nice indeed. So I'm going to break down the pairs which I think are most likely to provide an entry by the end of the day, which is these four here. So let's start off with pound dollar, my favorite of the bunch, and let's start off on the weekly chart. Let's do what the amateurs are not doing and do top-down analysis rather than down-down analysis. So on the higher time frames, we have this 1, 2, 3 touch structure here with this middle section here. We break below. People believe that this is now resistance because it's broken below. You can even see evidence of a retest here to go short. They get tagged in, washed out, because the bigger players were looking at this as a bargain area of value for a buy. So we don't just start selling just because we break below an area such as this. We wait for the market to show its hand, and the market showed its hand now by completely washing these people out, and we've had that impulse correction continuation to the upside, suggesting that there's no need now at this moment in time for price to come all the way back down to here. I've talked previously about how people like Warren Buffett say he loves it when his stocks and shares go down because it's discounted prices for him, so he buys more. Okay, what do you think people are doing here? If you look historically, this is a bargain area of value for a buy. Okay, the amateurs are selling the lows and buying the highs, while the professionals are buying the lows and selling the highs. Simple stuff. Okay, so if we just zoom in, you can see that we have this move up here. We come down. You can see now that we have this impulse correction, potential continuation to push higher. Okay, but that doesn't mean to say that within this range here, we can't make some profit potential, okay, to the downside, okay, which is what I'm going to be talking about today in a moment. Okay, so longer term, I'm kind of seeing this as a potential move down to here and then a push back up. May come down here to take out this low, which this low near missed to, and then push to the upside to take out this high, which this high near missed to. Okay, but as I just said, it doesn't mean to say we can't make some profit potential, make some profit in this small range. And what I mean by that is you can see here, you can see that we have this impulse correction continuation. We have a near miss to this low here, which may be taken out. And you can see that we broke above, caught people the wrong side of the market who started buying once again. And if you look at this weekly close, this is a really, really bearish weekly close, which has retraced over 50% of the body of the previous candle, giving me a clue that we may be coming down all the way down to here to take out this low, which this low near missed to, before potentially taking out this high, and then this would be an impulse correction continuation, which would complete that move. Okay, so if I just zoom in a little bit, we zoom into the daily chart, you can see that we've had some follow through there, bit of a wick, so it's no surprise to me when we get a bit of a wick that we will likely consolidate sideways for a period of time. Okay, if I just, with the other thing that to touch on is the last part of this move here has momentum. That's often what we see. That is usually the people getting out of their positions, okay, for the short, for the move to the downside. Okay, so when we see these structures, typically speaking, the last part of the move has momentum, and then we break above, catch people the wrong side of the market and push to the downside. So that all makes sense. If I just zoom in, if you watched the video I made last week on Friday, I believe it was, I said that we would likely get, a 1, 2, 3 here before a move to the downside. At the moment, at least, that looks like what's happening. If we just analyze this price action, okay, this is a fairly typical sequence. This is slightly larger, but we have that impulse correction continuation. We have another correction here. And then we have this another psychological pattern here. We have this 1, 2, 3 touch structure with a 1, 2, 3 middle section, which taps into this area of liquidity where volume was uh, uh, accumulated and triggered last time around, because there was enough volume here last time to smash through the base of this and take us all the way down to here, suggesting that there may be a similar level of liquidity. We may move with a similar level of aggression if we tap into that area next time around, which we did. You can see the move was of a similar level of aggression. And what I'm seeing now, is a potential impulse correction continuation to push lower. So what I'll be looking for today, I'm going to have to go slightly quicker because I've got 4 pairs on watch today. But what I'll be looking for is the same thing I was looking for on Friday. Is I'll be looking for price to tap up to this sharp move here, and then we would have that 1, 2, 3, and then if we got this 3 touch continuation, then I would filter this on the 1 hour chart, because this would be a 1 hour structure. I would filter it and look for an entry on the 15-minute chart. And if we didn't get this 3 touch, then as I said here, or a 2 touch 1 hour continuation with a 3 touch structural approach, which simply means that I'll be looking for something like this. Okay. That kind of 3 touch structural approach like that before the sell off. And then the same rules apply. I would drop down to the 15-minute chart to look for the entry. So I have an alert set just below the area of value. If it does not, this is starting to look more like a 3 touch structural approach. Just looking at the makeup of this is starting to look a bit more like this, but we shall see. We never know what the market's going to do. I'm just going to let it do its thing. Okay, so that is pound dollar. That's what I'm going to be looking for, and then I would be able to manage this down to here, the start of this running channel as a first target. And then I would use the mechanical management system. I would measure from this range down to here. I would set a take profit at 90% of that range. Okay, and I would trail my stop loss accordingly. So that is pound dollar. So let's move on. I need to speed up ever slightly. We've only got 20 minutes for these videos. Similar picture with Aussie dollar. Okay, so on the higher time frames, we just zoom into this part. Okay, we do have these near misses down here, but they're too far away to really worry about at the moment, this moment in time. What I'm seeing here as a potential shorter term move, we have slightly near missed to this area. This is partly why this is lower down on list. But if we just zoom in here, you can see, look at last week's weekly close, very similar to with pound dollar. We have completely retraced over 50% of the length of this candle. You see the big wick above. That likely means we've wicked out some liquidity, and you'll see that more clearly on the as I drill down through the time frames. But what I like about this is you can see that we have these psychological patterns. Once again, we have this impulse, clear middle section, impulse correction continuation. We tap above this high. We tap into the back end of some of this liquidity and the back end of this. We wick below, wick down, impulse correction continuation to push lower. So I'm just seeing this as a potential move down to here to take out the low of this structure, and then what happens after that remains to be seen. Okay, we could continue to push lower to take out these lows, or what could happen is this whole thing, we might break below here, push to the upside to take out these highs, which this high near missed too, and then we would have that kind of structure. Okay, that 1, 2, 3, and this whole thing would be the middle section, and then we would have this 1, 2, 3 there as well. Do excuse the drawing, but that was the thinking when I put this pair on watch. Okay, so if we just drill down, there's other little pieces to touch on this one as well. Notice, see this little exchange of liquidity there. Okay, so we had this larger correction, price left a little footprint, we came back up and we tapped into that footprint by way of a 1, 2, 3, and this exchange of liquidity here, this value area, there was enough of an exchange of liquidity last time around to cause price to smash through the brick wall, to smash through all of these lows, which suggests that if we tap into that area again, the same thing will likely happen. Okay, and it did. So what I'm going to be looking for from this pair is slightly different entry because we're trading to some extent above this. It's kind of through it, but slightly above it. And because there's a consolidation sat just above, what I'm going to be waiting for in this instance is a slightly different entry. Okay, so I won't be looking for, if we just analyze this on the 15-minute chart, you can see that we have a little exchange of liquidity there, which caused price to smash through this brick wall, to smash through this low. So, and what we do is if we measure from range to range, okay, this little consolidation there is less than 50% of this range away. So therefore, I don't take risk entries from the edge of the structure. And what I'll be waiting for instead is I'll be waiting for price to tap into this area of value. I'll be waiting for a 1 hour impulse down. And if it's, I won't be looking for a 5 minute, I won't be looking for a push down and a 5 minute flag because we've got this sat just above, and partly because we're trading slightly above here. What I'll be looking for is price to tap into this area, push down, and a 15-minute continuation as a minimum. And then I would filter this on the 5-minute chart to see if this was structured, and if it was, I'd look for the risk entry within the flag, and if it wasn't, or I missed the entry, then I will look for an entry on the break. And just seeing this here as this kind of 1, 2, 3, which would likely give us a 1, 2, 3. We may tap above, tap into a little bit of this liquidity. We may even break above, tap into that, and then push down, completing this 1, 2, 3. And also, just to touch on it, we also have what's making this look more likely is that we also have this impulse correction continuation, which would likely give us this structure as well. So a 1, 2, 3 leading into a 1, 2, 3. That is prime rib for me. Okay, but just for these factors all considered, that's what I'll be looking for today. So that is Aussie dollar. I'm going to move on. I've got an alert set there. I'm going to move on to euro dollar. Okay, so euro dollar, if we just zoom out, we zoom out to the weekly chart, you can see that we have this kind of 1, 2, 3 touch structure there. Okay, with this middle section, we tap into the last exchange of liquidity, which caused a big rally last time around. So it's no surprise to me that when we tapped into the area again and broke just below bargain area of value for a buy, that we moved aggressively to the upside with a similar level of aggression. We then have this one, so we don't need to come down to there. Again, at this moment in time, we have this 1, 2, 3, which tapped into this exchange of liquidity by way of a reversal structure. We then come down, we take out all of this low here, which these two lows near miss to, we break below bargain area of value for a buy, and then we push up. So no need for us to come down to here at this moment in time because we've washed out all of the liquidity, or likely most of the liquidity that was sat there. Okay, we don't necessarily need to take out all of the liquidity for a move to occur, only a vast amount of it. So you can see here you can see here this is a prime example of how on the higher time frames we typically break below before the big moves to the upside occur, because you can see here we tapped into this low, price moved up correctively, giving me a clue that there was still liquidity here dragging price back down. It did. We filled that liquidity and then moved to the upside. Moved to the upside aggressively. You can see if we just study this, much as with the other two pairs, we've had the wicks, we've retraced 50% of the length of the body of the previous weekly candle, and we did so by way of breaking above this high here, catching people the wrong side of the market, and then we have the move to the downside. We also have this impulse correction continuation where the impulses are of a similar length, giving me a clue that this is a completed move. And you can see now that we're trading below this previous consolidation, giving me a clue that this is just an impulse correction continuation to push lower. Okay, so if we just zoom in a bit more, you can see that consolidation starting to form. I like the fact that we are potentially retesting the back end of this if we were to push up, as it is starting to appear that we may do. Slightly atypical sequence. So if we are moving to the downside, this is not, we wouldn't normally see something like this so much. Okay, we would normally see these tighter corrections into, slightly more tighter corrections and into the larger corrections. So the sequence is slightly atypical, which is partly why this is lower down on the list. The more atypical a sequence is, the more likely we may get something like this, where we end up with that. Okay, where we end up with this kind of structure, which taps into something like that and pushes to the upside to give us this kind of 1, 2, 3 touch structure like that. So the more textbook our structures look like, then the more reliable they will typically be. With all of that considered, what I'll be looking for from euro dollar today will be the following. I'll be looking for price to tap into this. Okay, so we have that kind of, we may push a little bit. I'm not kind of fooled by this at the moment. I think we may push a little bit lower to give us more of a base, then push up. Okay, and this may be ready, let's say about lunchtime. And if that was to happen, we would likely break above that. If we tapped into the back end of all of this liquidity, broke above here, pushed down, and then we got a 1 hour impulse followed by even a 5-minute continuation, then that would be very deliberate, in my opinion, and we would have washed out enough of the liquidity to send price to the downside. So I'll be looking for that 1 hour impulse down from this area if we tap into it, a 5-minute continuation, and I'd take a reduced risk entry on the break. Or if we got the 15-minute continuation, then I would look for a 5-minute risk entry within it, or a reduced risk entry on the break, and then I would manage it down to here, and then be looking to target these lows here where there would likely be profit taken, and where I would use the mechanical management system. I would set a take profit at the 90% mark and trail my stop loss accordingly. So that is euro dollar. Let's speed up. Let's see if I can get through this in time. So on the higher time frames, we're at these all-time highs, okay, where we would anticipate a sell-off at some point. So we're kind of in uncharted territory. So that's partly why this is lower down on the list. But you can see that we have broken above this high. You can't see it so much on the weekly. We have broken above. You see the 2 wicks and then push back down below. Okay, this becomes more. This is the monthly chart rather. But you can start to see. Look at last week's candle. We completely smashed below here, smashed below all of this consolidation, giving me a clue that potentially you can see it starting to push up. But we have this kind of structure. Okay. One of the things that it looks not quite as reliable about this is, I've said about this in previous videos, when the middle section is more impulsive than the 2 moves in and out of it, that gives me a clue that potentially this is not a completed piece of structure. That alone makes this slightly less reliable. And when I see that, it's often the case that potentially, this may be the middle section, which then pushes up. And if this is the more corrective move, then this is actually becomes the structure, okay? But even in that run, we could still make some profit to the downside in the meantime. So what I'm looking for here, you can see we've consolidated below all of this consolidation, okay? And you can see, more importantly, or one of the important factors, is that we have, once again, we have an example of we have this impulse correction continuation where the impulse is of a similar length, and which just so happens to line up with this. So what this could be here, okay, it's not looking like it at this moment in time, but things can change very quickly. You can see we've broken above the area of value, and we've kind of tapped into the back end of all of this. We tapped the back end of that, we've tapped the back end of that, and this could just be a mini little scoop before a move to the downside, okay, where we could potentially capitalize on a short trade. So what I'll be looking for in this instance, whoops, I didn't mean to do that. Okay, what I'll be looking for in this instance is I'll be looking for price to break below this consolidation here, because we do have to remember, especially because we're in uncharted territory, that this could just be a bull flag to push higher because we've come from an impulse up. Okay, we've come from this impulse up. So to mitigate the chance of me getting trapped into a trade which is actually going long, what I'll be looking for is a break below, a 1 hour impulse down below the most recent low, which was that when I did my forecast. So below there, followed by a 5-minute continuation or a 15-minute continuation, and then I would look for that 5-minute risk entry within it, or a reduced risk entry on the break. I'll be able to manage it down to here as a first target and down to there. Okay, and then it could be all systems go. That's what I'm going to be looking for today, folks. I hope you've enjoyed this video, and I'll see you again in the next one. Thanks very much for watching.